The criminal investigation targeting Jerome Powell, chairman of the U.S. Federal Reserve, is an exceptionally rare event, one that can reasonably be described as lacking a clear precedent in the more than century-long history of the Fed. Since its founding, the Federal Reserve has been deliberately structured to operate independently from short-term political power, with the core mandate of maintaining price stability, controlling inflation, and supporting sustainable employment. For this reason, the fact that the head of the world's most powerful monetary institution has become the subject of a criminal investigation has immediately triggered concerns that extend far beyond Jerome Powell as an individual or the specific renovation project at the center of the case. On the surface, the investigation stems from Powell's testimony before the U.S. Senate Banking Committee regarding a major renovation of the Federal Reserve's headquarters. The project was initially estimated to cost approximately $1.9 billion, but later projections rose to around $2.5 billion, an increase of more than 30% compared to the original plan. During the hearing, Powell provided explanations about the project, and it is precisely these statements that federal prosecutors are now scrutinizing to determine whether they may have contained inaccuracies or potentially misleading information. Powell has firmly denied any wrongdoing and has confirmed that the Federal Reserve has received a subpoena from a federal grand jury, formally placing the matter within the framework of a criminal investigation. However, viewing the situation purely as a technical dispute over construction costs makes it difficult to explain why the case has generated such a strong reaction across U.S. political and financial circles, as well as within the global financial community. The broader context reveals that the investigation has emerged amid prolonged tensions between the Federal Reserve and President Donald Trump, who, throughout 2025, repeatedly and publicly criticized Powell as incompetent, accused the Fed of wasteful spending, and argued that monetary policy was not being managed in a way that supported short-term economic growth. Trump was particularly dissatisfied with the Fed's decision to maintain relatively high interest rates in order to curb inflation, while the White House favored more aggressive monetary easing to stimulate the economy. It is within this context that the decision by the Federal Prosecutor's Office in Washington, widely perceived as politically sensitive, to investigate Powell has led many observers to question whether the case represents a routine application of the rule of law or reflects a deeper power struggle between an independent central bank and the executive branch. Even though no formal charges have been filed, and Powell remains in office until the end of his term in May 2026, the mere existence of the investigation has already been enough, in the eyes of many economists, to create a potentially dangerous precedent. Reactions from key stakeholders underscore the sensitivity of the issue. The U.S. Treasury Secretary has publicly expressed dissatisfaction, warning that the investigation could undermine confidence in the Federal Reserve and introduce unnecessary instability into financial markets. Several prominent banking executives, including the CEO of J.P. Morgan, have cautioned that politically motivated attacks on the Fed, whether direct or indirectly pursued through legal mechanisms, could cause inflation expectations to rise again, thereby pushing long-term interest rates higher. This risk is particularly acute at a time when the U.S. economy is struggling to balance recessionary threats against persistent inflationary pressures. International reactions further highlight the Fed's global significance. A number of major central banks around the world have voiced support for Powell, emphasizing that the independence of the Federal Reserve is a foundational pillar of the global financial system. The U.S. dollar is not merely America's national currency, it is the world's primary reserve and settlement currency. As a result, any sign that U.S. monetary policy could be influenced by political motives has the potential to erode confidence among international investors and destabilize global capital flows. The impact on U.S. financial markets therefore extends beyond short-term movements in stock prices or exchange rates and reaches deeper into the realm of confidence and expectations. Immediately following the announcement of the investigation, market reactions were relatively cautious. The U.S. dollar weakened slightly, and equity futures fluctuated but did not descend into panic. This suggests that investors did not view the news as an immediate systemic shock, while still acknowledging the presence of underlying risks. The more significant concern lies in the medium and long-term implications. U.S. financial markets operate on a fundamental assumption that the Federal Reserve makes decisions based on economic data and macroeconomic stability, rather than political pressure. If that assumption begins to erode, risks could rise on multiple fronts. First, U.S. Treasury yields could increase as investors demand a higher risk premium to hold assets exposed to institutional uncertainty. Second, equity markets could become more volatile, particularly in interest rate-sensitive sectors such as technology and real estate. Third, the U.S. dollar could face sustained pressure if international investors begin to doubt the Fed's ability to maintain consistent and credible monetary policy. Beyond market dynamics, the investigation raises broader institutional risks. If the use of legal tools to exert pressure on central bank leadership becomes normalized, future Fed chairs may find themselves subconsciously factoring political considerations into policy decisions. Such a shift could weaken the effectiveness of monetary policy, as the cautious and sometimes unpopular decisions necessary to control inflation might be delayed or softened to avoid political backlash. That said, it is important to emphasize that, at present, assessments of political motivation behind the investigation remain analytical interpretations rather than established legal conclusions. From a legal standpoint, the investigation of a senior official does not imply guilt, and the U.S. judicial system continues to operate under the principles of independence and the presumption of innocence. Powell has not been charged, no violations have been formally established, and the Federal Reserve continues to function normally. In conclusion, the criminal investigation involving Federal Reserve Chair Jerome Powell represents a pivotal moment, not only because of its rarity, but because of the profound questions it raises about the boundaries between law, politics, and monetary policy. In the short term, U.S. financial markets have responded with relative restraint. Over the medium and long term, however, the greatest risk lies in the potential erosion of confidence in the Federal Reserve's independence, a cornerstone of stability for both the U.S. and the global financial system. How this episode ultimately unfolds, and whether it sets a dangerous precedent, will depend on how the U.S. legal system handles the case and on whether political actors choose restraint or further intervention in one of the most critical pillars of the modern economy. This is not merely an American issue. Its implications are global. And you, what do you think about this development? Share your perspective because it truly matters.